Interest rate and monthly payment is the top concern homebuyers have when purchasing a new home. Keeping that monthly payment low is important, but one of the most overlooked pieces of your monthly payment is how much you are paying for home insurance. Most lenders require that you escrow your insurance and real estate taxes, meaning that these are included in your monthly payment along with the principal and interest. And during this video, I'm going to bring in one of my go-to advisors for homeowners insurance, Jeremy Rowe with Goosehead Insurance, to explain just how you can get the lowest insurance rate available. But make sure to stick around until the end as we discuss the 5 key pieces of the insurance payment puzzle. But before we get started, do me a favor and smash that subscribe button, hit that bell right there to get notified when more informative content is published. Help this channel out as well by liking the video and sharing a comment below, because it helps when you let me know what you want to learn more about. So just how do you go about getting great protection at a good price? So let's dive right into this question, starting right now. Hello and welcome to Ask the Lender. This is your go-to spot for all things housing, money, and finance related. People like you tune into this channel to stay up to date on the housing market, interest rates, as well as tips on how to pay less money in taxes, steps to getting the lowest mortgage rate available, plus proven strategies to save and grow money. So let's grab Jeremy and get started. Jeremy, thank you for taking time to educate my audience on homeowners insurance. Guys, as we kick things off, I want to let you know that Jeremy is an amazing insurance professional who helps my client find great insurance coverage at a fair price. And before Jeremy shares with us, let me let you in on a little secret. You see, Jeremy is an insurance broker, which means he is able to represent multiple insurance carriers, so he can shop with these various brand name companies to make sure you are getting the best deal. I've put his information in the description, so make sure to check him out for your home and auto insurance needs. In full disclosure, I am a licensed loan originator, and I assist potential homeowners navigate the home buying process. And I don't know everything, so I rely on hand-picked professionals like Jeremy to discuss these related issues. So Jeremy, let's dive in. Help us break down the 5 key pieces to the insurance puzzle.
When it comes to having the best price possible for your homeowner's insurance, there's a couple of key things that you can think about, things that you can do in advance of buying your home that can really help get a low payment. One of the things you want to focus on is the protection class, where you're buying your home, where it's located. Second thing is the home insurance score that you have. So your rating that you will have as far as your credit, insurance history, things along those lines. When you're looking at homes, looking at the age of the home, how old the home is, can have an impact on your insurance price. The age of the roof is another big factor that you're going to have. And then, of course, what deductibles you're going to set for your policy, how much risk you want to retain. Those are 5 key things that can help really save you money when it comes to looking at homeowners insurance.
So let's dive in a little bit deeper into the credit piece of it. So what I hear you saying is that your credit score, in addition to impacting your mortgage rate, it's going to have a big impact, probably the biggest, would you say, on your, in addition to the protection class. And I want to learn more about that. But when it comes to what you can control, your credit rating is important. So guys, if you are watching this video and you have challenges with your credit, there's a video at the end that there's a playlist that breaks down everything you can do to improve your credit. So you said that your insurance history. So if you're buying your first home, do they look at your auto insurance claims, or is it maybe you've had renter's insurance, or you're buying a second home? How does that impact your insurance rate?
Sure. So for the most part, when a homeowner's insurance company is looking at your homeowner's insurance history and score, they're really focused on what your claims history has been in the past. For the most part, they're not always worried about the home that you're looking to purchase. They're looking to see, have you filed claims in the past? What type of claims have you filed? Those types of filings that you've had in the past, along with things like your credit score, how long you've been with a previous carrier, or are you switching carriers very frequently? Have you ever had a lapse in your coverage, or have you ever not paid your insurance? All those things factor in, and they can have a real and immediate impact on your insurance price.
Awesome. And when you said protection class, what does that mean? Because in my mind, and maybe this is what you were referring to, I grew up in a very rural area. We didn't have, the big fire departments that you see with, paid firemen, like you have in metropolitan areas. There was a volunteer fire department miles down the road. So does the distance that your house is that what you're referring to? The distance that your house is from like, the fire department or rescue squad or things? Is that what you're talking about with protection class? Explain a little bit more, if you will.
Yes, you're exactly right. So it's factors on how far you are from not only the fire department, but also a fire hydrant. So protection class goes from protection 1 all the way to protection class 10. If you're in protection class 1, you probably have a fire hydrant in your front yard and your neighbor is the fire department. When you're in protection class 10, you're probably in a situation where you're on well and septic, you're not around any fire hydrants. And if you do have the fire department, they're probably several miles away.
Got you. Got you. And the next area that you were talking about, explain a little bit more about that. So we've talked about your credit rating. We've talked about the protection class. You said one of the other things is the age of the house. Why is that important?
Sure. So for insurance companies, the newer the home is, if you're buying a new construction home, there are several insurance companies that understand that everything that's going into this home is brand new, it's up to code, it's following all the ordinances of law because it's a brand new home. And because of that, it doesn't have the same wear and tear or previous ownerships that an older home might have had. So a lot of times your insurance rates are a lot lower when it comes to buying a new construction home versus even a home that's 5 or 7 years old.
Got you. And on that point, let's say, guys, that you are looking at, purchasing a new home. It was built 20, 30, 40 years ago. Jeremy, are there things like if you do upgrades, let's say you upgrade the electrical system or the plumbing system or, items like that, what are some key things that when you're purchasing this older home that maybe if you're looking to do some renovations, what are some key takeaways and things that, the audience watching could upgrade and replace and repair that not just add value to the home, but also help lower your insurance? How does that work?
Absolutely. So the most important item for older homes is the roof. Having a newer roof, even on an older home, can have a real and immediate impact on the insurance price that you're going to get. Other things, as you had mentioned, the plumbing, the electrical, and even the heating unit for the home are all things that can be major factors into the home. When it comes to the heating, things like having a wood stove or a wood burning element within the home can have an impact on your insurance price that you're going to get. But focusing really the biggest thing that you can do is having a newer roof or putting a newer roof on the home gives you the biggest delta in your insurance premium versus when it's an older home.
Okay. So let's just run down these top 5 things again. You said that your credit history and your credit and claims history is one. The protection class, how far your house is from the fire department or a fire hydrant, that impacts it. The age of the house will impact it as well. Like you were saying, newer construction, it's up to code, the materials are new, the plumbing's new, versus buying something that was, built 50 years ago. Then you said that the age of the roof is important. And guys, look, man, I'm sure you would understand that. Just in my neighborhood recently, 5 homes, I've seen neighbors have new roofs put on because there was storm damage. There was a windstorm. It was just ripping shingles off the house. So having a newer roof minimizes the risk of water leaking in, causing damage. And what was the 5th thing that you mentioned?
Sure. So the 5th thing is your deductibles for your home.
What does that mean?
Yeah. So the deductible is a portion of the risk that a homeowner retains. And typically for a home, a deductible can be as low as $1,000. It can be as high as 5% of what's called coverage A, or the dwelling replacement cost of the home. There's normally two deductibles that you will have. You will have what's called an all perils deductible, which would be like a fire or a pipe burst in the home and there's water on the floor. And then there's normally a second deductible that would be a wind and hail, or it's sometimes called a hurricane or named storm deductible. So those are the two common deductibles that you would have for your home.
So what I understand is the higher the deductible, just like with your auto insurance, if you have a $2,000 deductible on your auto insurance, your monthly payment's going to be lower. Same with your house. So keep that in mind when you're setting up your insurance policy. And if you're buying a home, you can make changes to this policy at any time. It doesn't matter. You can add coverage, remove coverage. So a lot of my first-time home buyers, they tend to go with a little bit higher deductible, not too high, to keep that payment, that monthly mortgage payment a little bit lower, because that insurance premium is included in your debt to income ratio. So if you have a $150 insurance premium, that's going to impact you in qualifying versus having a $75 monthly insurance premium. So how you can raise and lower that monthly payment is by, one, the risk class and all these things, but by managing your deductible. So if you know that you have good savings and you have money in the bank, and a $2,000, $5,000 event isn't going to really put you in a pinch, then you may want to consider that just to keep your monthly payment. If you got a newer property and a newer roof, it may make more sense to have a higher deductible. Is that what I'm hearing?
Yes, that's exactly right. Normally, you would set a kind of a mental budget on what am I willing to pay for smaller repairs, and then what do I want to insure for the larger ones. I've had some people that I've worked with, and they had a $1,000 deductible. The claim on their home was only $1,500, but they filed the claim anyway. Whereas other people would say, I'm going to go ahead and not file the claim. I could pay the extra $500. It's not worth that. And they might carry a higher deductible, like a $5,000 deductible. So they would know that anything below $5,000, they're going to take care of without filing the claim. But in case of a more catastrophic event in the home, that they would pay their $5,000 deductible, and the insurance company would take care of a larger bill, $20,000, $30,000, $100,000, if it happened to their home.
Hey, Jeremy, thank you so much for sharing this helpful information. We look forward to having you on again. Thanks for sticking around. I hope you find this information helpful to you. And if you haven't already, do us a favor and smash that subscribe button and click that bell right there to get notified. And if you are looking for tips to raise your credit score, make sure to check out the playlist below. And we'll see you next time on Ask the Lender.